Good morning. This is Tom Alexander. It is Sunday, February 23rd. It's about 9:30 a.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly update that I do each week on the stock indices. This is free. Uh, you should be getting a notification of this if you're not getting, if you're finding me on YouTube and you're not getting a notification when I send stuff like this out. Shoot me an email, tom@alexandertrading.com. I'll put you on the list. I do not sell my list. I do not spam you with a lot of crap 17 times a day. So tom@alexandertrading.com, I'll put you on the list. Okay. Also, while I am doing the housekeeping thing, let me show this. This is my website, alexandertrading.com. You can go to the website, click on weekly update. If you do that, then you will get the weekly updates for each weekend going back several years. If you click on an update, for instance, you will get this is for February 10th. You can download a PDF. You can also find the YouTube video for that particular weekend. This is a great way to follow my work. What I am trying to do in this program of weekly updates is to discuss the markets and where I think they are and where they might be going, but also to show the continuity of a thought process of a very specific methodology. And that is trading auction market concepts. Auction market concepts uh, are, in effect, in all degrees of time, all the time, all the analysis that I do, all my personal trading is based on an understanding of how auction markets work. One can take that understanding and develop any number of strategies and tactics, whether you are a long-term investor or a short-term day trader. These are concepts that are immutable, they're incredible, they're powerful. Uh, and I try to show a consistent thought process. And that's the benefit. If you go to the website and you go through these reports, hopefully you can see a consistency there. Do I always nail it? Do I personally always get it right? Absolutely not. But what this methodology allows one to do is to know when I have a forecast. I also know what invalidates it, and that's a must. So I won't waste any more of your time on that. Let's get into the markets. Very fascinating now. As usual, the markets are always fascinating, at least to me. I've been doing this almost 40 years, and it's still fascinating. Let's go to the screen. Now, the big question is, and this is true in every bull market that I have been involved with since about 1985. As soon as the bull market starts, everybody starts calling for the top of the bull market. Well, this one's been going on a while, regardless of where you want to say it began. You can say it began in 2023. It's been going on for a year and a half, or you can say it began, I can go on and on. But we've had quite a run here. Is this the beginning of a bear trend? I don't know. And here's the kicker from a trading perspective. It doesn't matter. Just trade the market. Now, I will say that this drop, and I have been discussing the warning signs of what we saw beginning last week, and that we had the divergences among and between the indices. You can look on my screen here, and you can see, the SPX went to a new all-time high. The NDX went to a new all-time high. The Russell was way below its all-time high, and the Dow did not confirm either. I can go through the New York Composite. I can do, and I'll show you the New York Composite as well as the equal weight S&P. And then you had the internals, and we'll talk about the internals, and specifically what I'm talking about there. Very simple things: NYSE advancing, declining issues, and breadth. All of those things were warning that something had to change if the bull trend was going to continue. And if it didn't change, we were going to have this. Then on top of that, we had extremely mature structures that had developed, balance areas, high volume nodes. For you market profile aficionados, we had that nice Gaussian shape of a mature structure, in particular in the Dow and the Russell. We didn't have quite that length of in the short term in the SPX, the NDX, though we did have a 3 or 4 day balance area from where we broke on Friday in those two. So that's another shout out to understanding the auction market process and its value. So where are we now? Well, we're down 2.5% in the SPX, which is no big deal. You'd think it was the end of the world if you're watching financial TV, which is not good for your trading health, in my opinion. As far as key reference areas are concerned, or I hate to use the term support and resistance, as most of you who follow my work know, because there really is no such thing. There are areas that are key reference areas that are formed from auction market activity. And right now, we're sort of in an area, a rather tenuous area, because you have these previous lows. This is auction market activity. And then below here, you have another elevator shaft really that goes all the way down to here. Now, are we going to go? Am I predicting that we're going to go all the way down to here? No. Well, the read on this is that we had a ton of conviction on Friday. We had a ton of conviction last week. We're coming out of very mature balance areas, in particular in the Russell and the Dow, to the downside. There should be more downside to this. Is it going to be immediate? I don't know. No one knows. But as far as very short-term strategy is concerned, if I would love to see another wide range day to the downside. If we get that, that probably is close to a short-term low, and then we bounce and churn. If we bounce straight back up, I would sell it. I very seldom get on this report and make a call like this. But if we bungee jump, you know, back up into the deeply into this range on Monday, I would sell that. Now, how deeply could we go? I don't know. I don't use magic numbers. I don't use fib numbers because if there is a bounce, it will hit some fib number. There are a million of them. Pick one. But it, if you're picking one out of the many, it probably may or may not be that one anyway. I don't want to get on a soapbox about Fibonacci numbers. But there could be a bounce here. If it is, I think it's a sellable bounce. If we go straight down, I would not press the short side if this market goes wide range straight down tomorrow, especially if it does so into, let's say, the first half of the day. But that's an issue for shorter term traders. Longer term, I would be short or positioning short for this market. And then is there a good upside lean? Well, no, not really. Right now, the upside lean would be Friday's highs. If something occurs over the weekend that gets the market excited and we retrace this entire range and close above Friday's highs, all bets are off to the downside. But that's what it would take. Okay, so there's the SPX. By the way, these levels are all on the website. I'm not going to waste your time and go through the levels because you can go to the website, click on the weekend report. It's also in the PDF. You can print that out. You can see those levels. I'd rather use this time to have a discussion with you about the markets. Okay. So let's look at and in that report, I have the equal weight S&P. I have the New York Composite. I have the charts of the internals I'm about to show you. So again, if you are interested in those exact levels and you really want to study the charts and the internals and all the other stuff that I'm discussing, it's in that report. You can go to the website and look it up. Okay. All right, let's look at the internals. Okay, I landed on VIX, so we'll talk about VIX. VIX spiked up, but it's not even to 2020 is what I personally consider to be the low cusp of extreme. As you can see, we can get a whole lot more volatility to the upside. And if this is going to be, if we're going to have a wide range down day on Monday, you're going to see VIX spike up around, I don't know, between 25 and 30 at least. And, we can get a whole lot higher than that. If you go back, you can see for yourself. So be careful making assumptions about what is high VIX or high volatility. This could just be the beginning of it, particularly if we're going to go lower immediately next week. All right, let's look at the internals, NYSE. This is a chart that I posted. I don't know if I posted this last week or if I posted this in the member section for our membership. I do have a daily membership, by the way. Do several reports a day, have a live room, record everything that I say and do in the live room, and send that recording out in the evening to people. That's another learning tool. Okay. So this is the red is the 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues. You can see they've rolled over. You can also see that up here at this top, we were pretty close to where we were in terms of the 10-day moving average of NYSE advancing issues way back on the 24th, and we were a whole lot lower. So that was one of the divergences that I had been discussing. You can also see breadth down here is nowhere near a negative 2000 reading, which you typically get in severe sell-offs that are so even if we're in a bull market, if this is going to put in the next greatest latest low prior to a 6-month straight up ramp, you're probably going to have a 2000 breadth reading before that bottom is put in. Now, if we have transitioned into a bear trend of significance, then we're going to see more frequent negative 2000 breadth readings. If I go back here, you can see how rare they were last year. We only had 2 or 3. Okay. But if you go back further, you can see how much more frequently they get in bear trends. So that's something else to keep an eye out for. Again, the 10-day and neither the 10-day nor the 5-day moving average are anywhere close to a downside extreme that would indicate to be alert for some sort of short-term low. So bottom line here, guys, I look for lower prices. Now, whether that comes immediately or if we get some sort of attempt at a bungee jump first, I don't know. If we do get that bungee jump back into this range, I think it's a sell, and we'll see. But, there's a lot of room here to the downside. This entire ramp itself is an elevator shaft. So, guys, enjoy your weekend. I hope you found value in this. If so, please please subscribe. I would appreciate it. It helps with the algorithm as I try to build this channel. Have a great rest of your day.